Hello everyone, I hope you're all doing great. My name is Marcello Kolax and I'm walking you through the energy markets, this time for the week starting 19th of August 2024. It's just August and I know for a lot of you it's probably just still the summer break, but to be honest, for me, I'm already thinking about Christmas and this year I'm probably going to Vietnam. Not probably, it's already booked. I'm going to Vietnam this year. But before we do this, we still have a few good months ahead of us. And also the energy markets have not really been moving. And I do have a few thoughts on that I would like to share with you today. So, as always, we are starting with a little bit of a market overview. But before we do that, of course, you know what's coming. The Clever Markets Technical Analysis Academy is launching on the 30th of September. It's a 5-week academy until the 1st of November, and I like to believe that it is by far the most in-depth, hands-on technical analysis academy specifically designed for European energy traders. So if you need to spot trends earlier, need to manage risk better, if you want to plan your trades more effectively, then do get in touch. On LinkedIn, you can just DM me, and if you already have my phone number, then just contact me on WhatsApp. The sign-up deadline is the 20th of September. That's what's on the Clever Markets platform this morning. There hasn't been many day-on-day or week-on-week changes, so even though last week was reasonably sideways, on most markets, as we will see in just a moment, we are actually still within uptrend channels and everything is still looking bullish. So the bears or any bearish correction has not yet been triggered at all. And this is unusual because looking at the sentiment, it is quite bearish. So if we compare last week to this week, we can see that the bears are still dominant, but not as much as they used to be. We have had bearish dominance on this weekly sentiment survey for around 3 weeks now, 4 weeks, but 3 weeks, but the market is not moving lower. The share of bulls is gradually growing, but also there is more and more traders now being faced with the reality of the market not really moving anywhere at all. So here, once again, it is interesting to see if the sentiment is mostly bearish, but the market isn't moving lower. That could mean that if we actually get a bullish confirmation on the price in the next couple of days, then a lot of traders will be very, very wrong. So this in itself could fuel some sort of short covering maybe. Despite the bearish sentiment, market is not moving lower. So that means if we move higher, we will really move higher. Okay, so you might be wondering, what is this? This sentiment survey is conducted every week on LinkedIn. And if you want to make sure that you don't miss it, then do contact me on LinkedIn, send me a DM, and I'll add you to a WhatsApp group where I post this and other daily updates for your perusal. Okay, now finally, let's look at the TTF front month for this one. Was last week a shooting star. And a shooting star is a candle pattern where the bulls continue, or they're trying to push higher within the day. They can't hold on to their gains and they just kind of end up where they started. So this usually is a bearish signal. And for all the charts for gas and power, I believe EUAs, I have to double check, I have started drawing in these Fibonacci retracement levels. And they simply tell us how low the price can go. So here we can see we have not even pushed below the 23.6% Fib retracement. And I kind of need to wait for a break below this level before calling it a downtrend or a down leg essentially. Then once we push below the 23.6, we will see that the shallow corrections, will go to the 38.2, and the deeper corrections might go to the 61.8. And then what I always do is I try to look for confluences. So that means, is there an area where multiple support levels align? And we can see we have this gap, which is where the 61.8% Fib is, and we have this kinda trough forming here at the 50%, right? So this is really interesting. So I am looking, if we push below 38.47, I would be looking for the 34, 35 level. Now the question is, why didn't I put the Fibonacci retracement up there? Well, this reason is simple. I could have done this, absolutely. There's nothing wrong with that. And then also the down leg would have been triggered already. But I don't think that this peak here is representative of market action. I think this was just a blip, and it is overall not a reflection of what the market was actually convinced of or thinking. So that's why I'm putting it where most or where more price action is happening. You can, of course, put it at the upper end. There's nothing wrong with that. It is just a personal choice. Okay, so what is going to happen? So as I said, we need to break below 38.47 to kick off a correction, or all of this would be wrong, above 40.79, and that would be the point when I say a lot of traders will be very wrong, because then the bulls will continue. So you can see my expectation was or still is that we are going to push lower, and it simply is because the stochastic gave us a bearish signal last week. So here the expectation is maybe a shallow correction, question mark, before we continue higher. But whatever happens, I am still fairly bullish because I can see that the trend and momentum tools are also still bullish. So I think small correction before we continue. You check out the Clever Markets Academy and get in touch with me. We'll figure out together if you're ready to actually join this academy. Until then, see you around and have a good start into the week. Bye bye.